Welcome to Markets Now. I'm Michelle Rook with Naomi Blohm of Total Farm Marketing. A higher day on Friday and everything but the hog market. And Naomi, let's talk about the grains. It was a pretty ugly week except for Friday. Was Friday just all technical in nature in terms of the bounce?
I think primarily it was because we had seen that lower price trending for corn and soybeans and wheat for the whole week. And then finally, Friday night into early Friday morning, corn, soybeans, and wheat tested some major support levels on charts in terms of moving averages or retesting those August low prices. And with support holding, that gave courage to traders to come in and be either buyers new on a spec trade or people who had been sellers for the recent week started to exit those positions, buy them back, and then that lifted the market as well. We are at good value when you think about American agricultural products here. Corn in that low $4 area, beans in the $10 area, wheat in the 550 area. So really good value. We are, still competitive with the world, but we have to keep an eye on that higher US dollar that can kind of drag our exports a little bit. But in value wise, we're at some really historic values. So I think we're going to see exports just continue to plug away and be strong with global end users wanting to secure product, wanting to secure good American product as we head into 2025.
So, Naomi, do you think you mentioned the higher dollar? Do you think some of the pressure this week was because of that, or was this fear of tariffs, fear of these Trump administration appointments?
Everything that you said. That was the reason for the markets pushing lower this week. There's still so much uncertainty about that. So the market reacted in fear a little bit, and we saw prices sold off. But we also have to think about how, when you look at the balance sheet in the world, when you look at global corn ending stocks, global wheat ending stocks, they're teetering on working lower. So we have to keep an eye on value here. And we have to keep an eye on South American weather because there really isn't any room for error when you look at the global balance sheet. So even though we have good, hefty supplies here in the United States, when you look at the world still needs to come to the United States to make sure we've got product, to make sure we've got quality product. And I think that's why you saw some of our exports pick up so much because of the value, because of if there is a weather issue in South America in December or January, market prices are going to rally. And of course, trying to get ahead of the uncertainty with the new administration.
Yeah, speaking of that, there's some saying that some of the uncertainty because of tariffs is causing front loading on this export market. Are you in that camp?
Oh, I think that was definitely part of the reason that we saw such strong exports over the past few weeks, but also the bigger reason, value. Cheap corn, cheap soybeans. They know that the Americans are going to get the product delivered on time. They know it's going to be quality. But I think definitely there was an element of we're not certain what the new administration is going to be bringing in. So people, maybe other countries wanted to get ahead of that.
Let's talk about the lack of weather threat that we're now seeing in South America as well, because that is kind of playing a role in the markets too, isn't it?
Absolutely. So as soon as we had heard that there was better weather conditions happening for both Brazil and Argentina, that was another reason that the markets had pushed a little bit lower. But you have to remember the bulk of Brazil's growing season, as far as when they're getting into the critical points, comes at the mid to late point of December and early January. So that's also part of the reason why sometimes we see that soybean price move higher throughout the month of December. And so the average soybean rally, when I look back at the last decade, because a client had asked me, is there any truth to the old saying that the bears get Thanksgiving and the bulls get Christmas? And I said, well, let me look into it. So here we do have prices working lower now for soybeans heading into Thanksgiving. And so I look back at the past decade and I picked November 20th as a start point because I figured that even though Thanksgiving obviously changes every year, November 20th is a good start point to catch the beginning of Thanksgiving. And then I looked from November 20th until December 31st. And looking back at the past decade, the average rally for March soybean futures during that time frame is 90 cents. So now some years, just be aware, some years the rally happened more often at later November, things fizzled out in December. Sometimes the rally started right off the bat on November 20th and worked higher all the way to the end of December. There were years where the rally didn't even start until December 1st. So just know, though, we're getting closer to a seasonal tendency for that market to work higher, and it's the South American weather that can sometimes fuel that rally, along with keeping an eye on exports and watching how funds are participating towards the end of the year. So the bottom line, though, whatever rally we get, if we can get the seasonal rally, is going to be an opportunity for cash sales. So be thinking about that for anything that you might have in the bin, and also start to think about that in terms of forward contracting and cash sales for your 2025 crop also.
So Naomi, the seasonal rally that you talk about between Thanksgiving and Christmas, is it only for soybeans, or do we see it in corn or any of the other grains?
Well, I also did some looking at what happens for corn during that same time frame, and March corn futures during that same time frame has a seasonal average rally of 33 cents over the past decade. So there again is going to potentially be some opportunity for producers to be making sales. And I know there's a lot of producers who have said, this year I'm not sure that I really want to hold grain into the spring or into summer just because of interest rate costs, storage costs, all of those types of things. And so there might be a little bit more of an opportunity where people are going to say, you know what, if this rally comes at Christmas time, I'm selling a bunch of grain. I'm going to get rid of some corn. And a lot of folks also like to be selling after January 1st for a new tax year. So I'm thinking, be ready if we can get that rally, make the sales, but also then be ready to quick and think defensively and protect on price bushels as we go into January, not only from a seasonal perspective, but again, heading into the uncertainty of what the new administration could bring to the marketplace. And then if we end up seeing no weather concerns out of South America, that could weigh on the market as well as we head into the new year.
What do you think about demand for wheat right now? Is that the problem on the wheat market, or is it just the fact that we have seen improved weather and conditions?
Yeah, the wheat was weighed lower on the rain that came through the southern plains. We're expecting just to see quality improvement for the crops there. We also got a little bit more word that maybe the Russian crop has the ability to become a little bit larger. Russia continues to just export wheat at cheap values and undercut everyone else. But again, keep an eye on that global balance sheet because global ending stocks for wheat are at 9-year lows. They're trending lower on the stocks to use ratio as well. So we have to continue to weather watch around the world because we can't really have any risk of major crop failures anywhere. For the past 2 or 3 years, we've been actually using all of the wheat in the world that's grown, just relying on those ending stocks that had been there. So we'll see how the global weather is for wheat. We'll see if our demand can pick up because our export demand is stronger than a year ago. Part of that is on buying on value, and then keeping an eye, of course, just in terms of how the dollar reacts going forward and watching how Russia and Ukraine and that war maybe wraps up or continues again, along with the new administration coming in.
Yeah. Do you think that Trump is going to be able to end the Ukraine war or the Black Sea war? He says he is.
I think that he is a good negotiator. I think that he has the ability to really get at the heart of the matter for both sides, and he'll be able to help get that war come to an end sooner than later. I don't know if it can happen in the first 100 days, but I think he'll get in there and start the negotiation process for both sides.
With all this uncertainty that you talk about, what are the funds going to do? What's their next move here? Because they haven't really committed one way or the other, have they?
They have not. And that's the thing. So usually, there's also an old expression, follow the money. And right now the funds are pretty darn neutral in the corn market. They're still a little bit short in wheat and in soybeans, but for the most part, they're sitting and waiting too. And so what are they sitting and waiting for? all of the things that we have been talking about. They're watching the value of the dollar. They don't know what the Trump administration is going to do. They're not sure how the South American weather is going to fare. They're not sure how the Chinese economy is going to go. So they too are waiting for the same types of fundamental reasons that are going to suggest if they need to become net buyers in the marketplace as we head into the new year, or potentially sellers in the marketplace. So keep an eye on what they are doing. The funds are their own fundamental right now also, and they matter as much as watching the weather in South America and keeping an eye on the demand that we have for our crops in this country as well.
Absolutely. We should also talk about the funds on the meat side of things, because they're long in cattle, they're record long in hogs. Now, what do they do? Have they tapped out yet?
Well, that's what we're going to be waiting and watching for, because my question would be, okay, we're heading into the end of the year. So if I'm a major fund trader and I want to show profits on the books for the end of fourth quarter, for the end of the year, to do that in the livestock sector, that means you got to start selling your long positions. So
Oh,
we saw that, I think, a little bit this week on the hog complex. We saw a big bearish reversal on Thursday with follow through selling on Friday. The uptrend is broken. And so I think we're going to start to see that we're seeing the funds exit those long positions. And when you look at the cattle complex, the live cattle, we had December cattle today closed below the 100-day moving average, and the February contract sitting right on it. So the charts look a little iffy. And if we see more selling next week, it could be technical selling, which then leads the funds to say, okay, it's time to exit our long positions. And then they start to sell, and that weighs on the market price, turning it into a technical sell-off free for all. So just be a little bit cautious about that. Be ready for it. We'll hopefully start to see some holiday demand pick up heading into the Christmas holiday season for beef, but it could be a little bit slippery in the short term. And then we have a cattle on feed report coming up next Friday, and that'll give us some new indication of updated fundamentals.